Good morning. Just waiting for our friends at YouTube here. Takes a second. All right, so it looks like we have liftoff. China talks for the moment. We all know how this goes. So we look at the charts. We trade them as we see them. We've been in this mess for over a month. Things shaped up almost exactly like I shouldn't say predicted. I gave a guideline as to what could work in the letters over the weekend, based on the close on Friday, and that was a drop under, the current little few bars there on Friday, and then a reversal. So it didn't happen, with just a drop and a reversal. It took 2 days. And so here we go. And it's clearing. But the idea was for it to have a correction bar and hold, about this part of the range there. And that's what happened. So when you have a move, and the thought process there was the fact that the weekly had this convincing, let's just say, reversal bar, the big green bar, and prices had pulled back within an uptrend on the weekly. And, this has been going from the bottom of the range to the top of the range to the bottom of the range, blah, 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 back and forth. And so what we were looking for this week was some consolidation to absorb the supply, bullish price action at the top of the range, this corrective bar and price action, and then it could go up theoretically now to move up to new all-time highs. Now, of course, look, this becomes resistance. This becomes support. That's the theoretical, of course, based on just simple analysis. But this resting period should have fueled the tank to be able to get through this resistance area. So we make some assumptions based on the technicals that have happened. And now we assume, based on this resting period and test that have created the support, that this is going to take out the all-time highs. Now we see what happens. The next part of the factory work, as we call it, is to objectively monitor what's happening. And while this bar is still, being created, it's the beginning of the day, the prior bar's low becomes our first reference point of support. And it's based on this price action here, this 29.40. And in theoretically, it shouldn't even go down there, right? Now, everything that I'm saying here and explaining is based on what happens when things are working. And that's how we monitor things objectively. If we know that, look, if we monitored the last, I'm going to pick a number, 4,000 trades, and out of the ones that worked flawlessly, they did this, well, let's see if this one will do that. Well, of course, it could do something in between that and complete failure. So that's how we continue to monitor. Now, as prices came up, as they did out of this consolidation, it should create support. And that's exactly what this is doing. Buyers stepped up in the middle of nowhere based on this 60-minute chart. And now as they come up to the prior high, those are trading in smaller time frames will say, oh, let me get out at resistance. And those that are trading in longer time frames will do what I'm explaining to say, look, this is a bullish breakout. This resistance should get taken out. While there's this probability of a stall, buyers should keep coming, and this should go sideways and go higher. It's the same concept of over here, right? Just in a smaller time frame, meaning this big bullish bar, as prices come up to resistance, if buyers truly believe this is going to go up, it'll chop around in this area, as this is beginning to do in this area, and then it'll continue to push higher. And so it's really common sense thinking once you understand price action. And by common sense thinking, frees you from the squiggly lines on the bottom of the chart called indicators. So here are the NQs, and as we've been talking about the last couple of weeks, the patterns are quite similar between the markets, not exact, but similar. And we see the NQs with a similar pattern here at resistance with a weekly reversal bar, and now it's poking its head above that resistance. And we've got the same hourly chart, which now should move above that area and into the void just above here. It's all simple in the explanation, isn't it? Then we see it unfold in real time, and all that noise between our heads starts playing games with us. But if you just monitor this, looking at the patterns bar by bar, waiting for a pivot to form, and then it makes a new high, and we then mark that as major resistance, and we just continue the step-by-step process. It becomes a lot easier having a method of how to monitor things objectively in a systematic method, a heck of a lot easier. So our assumption is that this is going to keep going higher as long as we don't see any tweets that come out, saying, I don't like what they said, or I don't like this, or who knows what. This should go up to new all-time highs. Now, sometime this month, we're going to hear about the Fed some more, and the assumption is they're going to lower, so that should help. And so let's just be bullish for now until something changes. So let's continue to go up. Consolidation here should keep going higher, and we'll look at smaller time frames here in the room, of course. The Russell, which has been the laggard, it has multiple reference points to get through, so it should have more difficulty trying to push higher than the others. But sometimes the weaker one plays catch up, especially for reasons of what this chart was telling us based on what other traders are doing. Okay? So think about what was going on here. What about what you would do looking at this daily chart? If you were going to pick one to short, most of us would pick the weakling in the bunch. Now, it's down more than the others, but if we look at the Russell, green bar ignored, which it should have been, it's not for the moment, right? This is the one that had the greatest potential to make money because of the void below. Now, with that in mind, if this whole thing unfolds the way it appears to be in the moment, those that were shorting this are going to scramble to cover, and they could drive this up through this resistance. Theory, not reality yet, but it does happen. Whereas what is weak tends to outperform. But these are pretty compelling patterns here, breaking out to new all-time highs to consider that. So if you're going to play the market, I think it's better to be playing here with maybe a smaller position here in the weakling to see what it can do. Oil, it's holding up here within this slop, so that's a good sign. You see it breaking here above the highs, and this is exactly what the S&P should do, right? We see this consolidation that's going on here. See how it was going on here? And notice the little dip. First, the little fake out to take out, the 2 minute traders that were, looking to go long. Not that they were wrong, but the smaller time frames have higher probabilities to shakeouts. So, and especially when, you're playing it tight, these markets just, I don't know, probably because of the leverage, I've just seen it so much over the years that they just have a higher tendency for these shakeout wiggles and then the reversal. But if you're long and you see a break and it comes right back up again, that's a tell. That's like, yep, they're just lurking below, and odds are they're going to take it higher. Bonds coming in, relatively large amount here as far as a single bar. It's been consolidating. We did talk about the fact that momentum was slowing, right? Strong pretty strong, and a slightly higher high, and then the slowing in momentum, but that doesn't violate the trend. All right, so here's our major support point since this made a new high, and now we'll just see what's going to happen here. If this keeps coming down to here, we know that interest rates are going up, and the whole yield curve concern, along with China, becomes less so, and that is what will help fuel the markets to those new all-time highs. All right, so here we're creating a bias or a belief as to what may happen, and then we take that into the trades that we're going to put on, and then we see what actually does happen, and we monitor. And we see that the bonds here have a void below because of the way they went up. Right? Went up fast, creates a void. It was building support. That has failed. That should continue to push prices lower. So we have gold here starting to, traders coming out of it, getting a little slowing momentum type of price action. Trend is still up, higher highs and higher lows. So we'll see how far this goes here. So some money coming out of here is going into the markets or equities here. So we'll continue to monitor this and see how it all unfolds. If these relationships stay intact. And silver, it had this explosive move. You see the rounding top here? All right, so this is how you play a climactic pattern intelligently with multiple time frames. I mean, higher time frame has a run up far from the 20 and a far from resistance. Then you go to your smaller time frame and you look for a distribution pattern and then a violation of support, and then you short it in this time frame or even a smaller time frame, like a 5-minute, looking for prices to pull back within this uptrend to where buyers will step up again, looking to buy the pullback within the uptrend. And lastly, I want to take a look at the transports. And this was the winner. Can you imagine? This was the winner percentage-wise last week, as terrible as this chart looks. But it had a similar pattern up here. And, percentage-wise, it had a really good week last week. So we got this reversal. And this was a really, really important line in the sand here to hold on the retest and that potent reversal. So now we'll just see if these can clear here, and that's what should happen. So we monitor the transport sometimes to trade what's in there, but also to see if they are participating. And we know that they were weaker, and over the last couple of years, they've tended to be weaker during market corrective periods and then play catch up. So what we should see is the transports push above this level if the markets are going up to new all-time highs. We don't know if they'll get all the way up here since they've been the laggard. However, if we see the market make new all-time highs and the transports are still dangling around up here, that could be a bearish sign intermediate term. So these are some of the things to monitor as what's happening here today begins to unfold. And so you can monitor that objectively, looking at these relationships between markets, and then of course ultimately just what's happening here. Does this breakout hold? Does it continue higher like it's supposed to? Does this absorb this resistance and push higher? And we just continue to monitor, and I just love to repeat without the squiggly lines called indicators and clouds and waves and all of that hocus pocus. So here you go, guys. Dan, take it away. Let's see where we take this today. Or they take it, everyone else.
All right, good morning. Thank you. Let's look at our opens as always. Start with the weekly. Yeah, I had a subscriber here email me here. I'm looking at MA, and new student took Greg's swing course and my full options course. And she says, "Hey, Dan, what do you think of this pattern?" And I said, "I absolutely love it. Breakout of a big reverse heading shoulders, big move here. Kind of reminds me of that booking BKNG. red bar ignored, back to the high. Beautiful close. You sell a strike, 275.5 or the 275, $10 wide. So that's on my list today. Looks fantastic. All right, weekly CME looks fantastic. We have 2 trades in the swing and 1 trade that expires tomorrow in the weekly. Google, we liked into a condor, and now it's we have the 1200, 1210. You know, let's just see what happens here. But I've been saying yesterday, people were asking about other condors. I'm like, if the market's going to break out, careful on these call sides. And that's what's happening to us in the spiders. We added this yesterday. A put spread looks fantastic. SMH, we have a put spread, looks great, and we're long this in the swing ladder. Concerns about third-party data, Netflix, 283. Ooh, that's ugly fall. That's a bearish downtrend. All right, Spider, I just sent an alert how we're going to handle this. 5-minute high, just get out of the whole thing. Of course, it's going to be at a loss, but it's only a $3 wide. We took in 92 cents, and we're going to, you know, be selling the at the monies at a big profit, and we're just going to manage it. Tilray, we have a put spread, and that's it in the weekly. Now in the swing and options letter, ABMD, bear call credit spread. Akamai long stock looks fantastic. CME we talked about. DGX call spread, the 105s way up here. And if the market stays, you know, bullish, I might look just to get out of this because of the rising tide problem. Dish, we're long stock. EQIX put spread. Didn't like the 2-bar reversal yesterday. You know, we mentioned the concern with utilities and REITs is if the risk on trade starts going and bonds fall, then that's the problem there. But we have way out of the money. Wow, we have the 530s way the heck down here. Look, the 50 MA, 531. FLT put spread. GLNG, we're short stock, and I tightened the stop yesterday. GMS, long stock. Actually, it's the back half stopped out yesterday. I moved the back half, so I'll close that out here when the market opens. Goldman Sachs put spread. Okay, well, got us a little nervous on this pullback, but held support. Looks great now. Expires tomorrow. ICE triggered long stock. ILMN, we're short the stock with a tightened stop. Actually, I tightened it to 274. We're in it at 280, so we still have a open. We covered the thirds, but we still have a nice open profit. KBH put spread looks great. CLAC put spread. KTOS long stock. MDC long stock. As a 1, 2, 3 MGM short stock. Oh, we have a lot of opens. Wow. Wow. You know what? We got 10 more opens here. I want to get to Gapper. So you all just ask me if you have any questions on the rest of those. A subscriber asked me this. Remember, this was a beautiful, beautiful bear flag channel. Wow, I got to put that one on the scrapbook. Email myself. So beautiful, beautiful breakdown right there. You got these topping tails. Oh, I remember this day. We were contemplating a 190, 200 bear call credit spread. I remember that pattern. And it was, you know, bearish on the weekly, another bear flag there on the weekly too. But he was asking me about, hey, Dan, can I buy a put under the lows here? And I said, yeah, I like the pattern. But they were too spready is the problem. So it's a big veto. Yeah, so 5-minute high then on any stops. That's our rule. MA we talked about, that was another subscriber. BRNT earnings, it's garbage. SMAR, garbage. Work, gap into all-time lows. Recent IPO, that's in pain. Please explain. Hey Tim, do me a favor and put your drop down. This looks like a buyout. Your drop down to all panelists and attendees. Tim's asking me, please explain spready. Spready is just look at the bid and the ask. They're like $2 wide. We want tight. Spiders, Apple, Facebook are tight as can be. And then, you know, we go out and we do spreads 10, 15 cent wide when we're selling them at midpoint. So, all right, Tim. This 935, that's a nasty gap. Percent-wise, CPRT of 77.51. Yeah, that trade's very sloppy, so I wouldn't touch it unless it kind of got a 30-minute high. Let it get its sea legs. AVAV, 56.50, it's way the heck up here. CLDR, 808. It's a bullish gap, but I don't like the way it trades. MDB, 158. It's, you know, flattish. Hey, McGraw was saying PNW in the security area. He wanted to look at those stocks. So now that's a monster gap. Nothing to do with it now, but as we looked yesterday, no volume, junk. But we are in Akamai. Remember, we scanned all 17 stocks and hack, HACK, ETF. And this was the best looking one. And we were in it already. MIC, relative weakness. I think that had earnings, but that's garbage. SIG had earnings, big old gap, 1443. Now this thing's been clobbered. 1450 right here. You know, you might get a swing trade out of that. Sienna getting beat up here after gapping up to 45. Wow, look at that. It was here. Now it's, I mean, imagine, folks, if the market were open, the size of this nasty engulfing bar from the pre-market range. That is pain. This is garbage, you're gone. G triple I 2190. If this were just chopping sideways pre-market, then this would be a tier 1 for me. But now that it's ripping up, it still looks higher, but we need a pullback because I view the pre-market pattern, provided it's liquid, which this one is, they're nice bars. I view the same pattern that I want for my setup after the market. Wow, that's just nasty gap there. LVGO. IPO, you know, it came down hard, bottoming pattern. I got no interest. LE, big old gap. Has room. Let's see how that sets up. Kirk, that's bearish. Look at that, $1. That's $1. And it looks like it's going lower. Poor Kirk. Hove, housing stock, sure underperforming. Wow. Hoft, garbage. ATVI, this was one that